Let's move on now and package up consumer confidence and sentiment and also look at retail sales. So we saw the Westpac Melbourne Institute Consumer Sentiment Index in Australia jumped 6.2% to a reading of 86 in February. And that's up from a reading of 81 in January. And it's the highest reading in 20 months. But remember, we're still pessimistic. Now, so that still means that, we're not necessarily at that sort of level that we're all celebrating. And that's where the RBA wants us to be. They want us to be less spending, less confident, keep our money in our wallets as part of that particular point. But it's certainly, this period of time where we've seen below that 100 mark, it's the longest streak since the early 1990s recession. So this has been, from a consumer sentiment and confidence point of view, one of the worst periods of this survey. So that sort of gives you some context. So let's also then look at retail sales. And we saw retail sales in Australia increase by 1.1% month over month in January, which is the latest data at the time of recording. Sales for clothing, footwear, personal accessories, retailing bounced back 2.4% versus a negative 5.4% in December, along with those of household goods, retailing, which was 2.3% versus negative 8.2%. Department stores, 1.7 versus negative 6.5. Other retailing, 1.7 versus negative 5. Cafe, restaurants and takeaway food, 1.3 versus 0.7. And we're basically seeing that the February data from mine is a signal for the RBA that there may, that's a lot of improved retail spending. Now, if that's a per capita read, it's hard to get around that. So I then sort of bring myself back into a year-on-year look at this, and I see retail sales in Australia increase by 1.1% in January. And you can put that down to, I think, increased population growth and nothing else. Evan, what do you see in terms of the consumer sentiment and retail story?
So the consumer sentiment is kind of weird, and why I say that is that we are really pessimistic about now and what's been, but actually more optimistic about the future. And that probably comes down to the idea of what we've been discussing, which is rates. The consumer is expecting rates to be cut. So they are expecting that. And if you look at what their next 5-year expectation is economically, it's much, much better than it has been. So again, this is what the RBA is sort of and has been highlighting, this story around inflation psychology, growth psychology, blah, 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 that we are hearing and believing it. And so unfortunately, the catch with that is that believing it and it actually happening are two different things. and that, unfortunately, a bet is not a fact, as they also say. And that's what I see around the confidence numbers. So it'll be interesting to see what happens as rates get put on hold for longer than they expect, if that starts to fall again, and I expect it to. Retail sales, at the moment, they are so skewed by changes in habit and spending and sort of also timing. Do not underestimate the impact that November is now having on all of this data. So Black Friday and Cyber Monday is completely destroying December sales. If you actually try and average them out over 3 months, it's actually showing that overall retail sales year on year is contracting since October. So it's messy data, and that's why it's hard to really give a good, explanation to you guys out there, is because at the moment the data is changing in a very short period of time, a couple of years, that it's not seasonally the same as what we would compare it to previously. So that's why I'm a bit hesitant on it. I do apologise.
Well, that's fine. I mean, I think what we need to be doing is when we see some of these new retail sales data coming out, we want that slowing down. If we want interest rates to come down, if everyone's feeling pretty good because they're forecasting interest rates to come down and they're moving early, which is what they're doing on property. We know that story, right? It's been better than expected. And so if that then creates that wealth effect. So back to your point before about the savings ratio starting to etch up. And, we also talked about, there's a big, huge sort of demographic, which is the baby boomers, and they're in pretty strong position, right? They're obviously downsizing their properties. So we'll talk to that in a bit more detail when we talk about the property side. All right, let's wrap up the economic numbers by looking at the business confidence and conditions. And we saw that the NAB Business Confidence Index edged down to a reading of 0 in February from January. January's reading of 1. Now, this figure is below the long-term average, with the retail sector being the major drag amid the cost reductions of spending power that we're seeing in that area as well. Now, in terms of business conditions rose, however, now that's back above the average, which is a reading of 10 versus 7 in January, as sales 14 versus 9, profitability 9 versus 6 picked up, while employment grew further, 6 versus 5. So this is also telling us, again, that businesses are still pretty, the conditions out there are still pretty good for businesses. Forward orders continue to ease, negative 0.3. So that's that forward-looking stuff. So again, that's the slowing versus negative 0.2, as did capacity utilization, 83.4 versus 83.7. So that's coming off. Labour costs growth stayed at 2%. In quarterly equivalent terms, while purchase costs grew by a steady 1.8%. So those input costs are still growing, and that's flowing through into the overall finished product costs. In terms of product price growth, quickened. So we saw a reading of 1.3% versus 1.1. In retail, price growth rose to 1.4% from 0.9. Recreation and personal services prices increased more, 1.3 versus 1.1. And quoting Alan Oster, who's the chief economist of the NAB Bank, who produces this report, he pretty much says it quite simply: these results are a good reminder that progress on inflation to date has been driven by an improvement in global supply. And from here, the improvement is unlikely to be linear, was his statement. And I concur. This is bouncing around services inflation. What can you add to that story, Evan?
Yeah, and I think that's a beautiful way of putting it, is what he's basically alluded to. No longer can we rely on supply inflation to be the only factor that drives this. Demand is there. It's the demand story. Now, it is coming off. We know that. We've gone through that this entire hour. But it is still certainly above what you would normally expect with 13 rate rises. It's still above with the cost of living, pressures that we have. And that will be the next thing to see, that moderation in that space. I think also, again, you look at what's happened in confidence, what's happening in the conditions. That differential has been like that now for almost a decade, but the width and the spread of it is getting wider. So business confidence continues to be really, really lackluster, but the conditions are actually better than expected. And that is also something that NAB highlights quite strongly. Again, the conditions are there. It's why employment's still growing. It's why people are still getting wage increases. Economic flow is still stronger than expected. But overall, business leaders know that things are slowing and they're preparing for that. So there's a disconnect as well in that space.
Yeah, so I mean, if we summarise it, overall, what we're seeing here is there has definitely been a spending movement towards that essential spending. Naturally, the classics, shelter, clothing, the food, the staples. Other people, in terms of insurances, they're also essential spending for a lot of us as well. So we have seen a decline in that discretionary spending, and I think the RBA will be looking closely in terms of whether that's increasing or not, whether we still see, that revenge travel story still taking place, or if that continues to start easing off as well. Coming back to the other big themes that we've been talking about in terms of, are the businesses going to keep investing, and what's government going to do in terms of stimulus, in terms of their fiscal policy outlook in the May budget is going to be quite interesting. Obviously, coming back to the employment story, we still need to see the brakes being put on in the economy, and hopefully that unemployment story going up. I know that sounds counterproductive, but we need that for ultimately lower inflation and ultimately lower interest rates. And that productivity improvement sign is also good for services inflation. So I still think there is a narrow path that the RBA is trying to tread here, and I think that's a fair and reasonable assessment of how difficult it's going to be for this last mile.
Mm-hmm.